All right. Let me do something real quick and we're gonna start. I'm gonna do it on my phone real quick. We're gonna start in a minute. 6904. Ain't be scared to get in. Bear money don't make money. Got here. That's a $50 bag. That's a $16 bag. Stop losses is hideous. Ain't worried about little small account growing. So let me delete this. Before I go over this trade, let me tell you something. This is really gonna be about Fibonacci, right? We're gonna go over Fibonacci trading. Nobody really made a video about Fibonacci trading, right? This is just another confluences. So, as you know, the market works as trending up or trending down or trending sideways. So in the uptrend, you have your big push up, right? Then eventually it gets to a resistance and it retraces, right? Wherever it retraces at, it's going to come to retest the resistance and break. The market breaks on the uptrend, it comes back to retest the last high, which is right there, for an exhaustion. And then if it doesn't break it, then the market keeps pushing up, right? Simple, right? Let's illustrate the areas of these will be key areas where the market broke and retested. Like if this uptrend broke this ceiling, came to a new ceiling, exhausted, turned that ceiling into a floor, broke the next ceiling. Obviously the pullback was right here. Well, the pullback started right here, came to this ceiling, made a floor there, kept breaking, right? Until eventually it turns around. But at this point, the whole idea and what I look for when I do trade setups is I want to identify the push, which is step one. Step one is the push. Step two, I want to identify when is the push going to be over. We can look at market structure alone and see where the push is going to be at. And we're going to see the behaviors of the candles when they get to these pullback areas where market exhausts. Now we are going to see the last resistance turn into a support. This is very key, very, very key, because this is when I get in. Once I identify this, I get in right there. This is our entry. So when it gets right here, I'm sitting here patiently waiting for bullish momentum to continue so I can put stop losses. So it'll be something like this. So we got the bullish, the W, the inverted head and shoulders. We have whatever bullish behavior we're looking for, right? So we'll have something like this. The stops below the area, the key area. So the stops will be below it. Take profit to be the next, the last pullback area. And we out the trade. If I'm swinging it, then I know that the market is moving like this. So you'll know that by just looking at how on a higher time frame and stuff, then TP2 will be right here. And then, TP3 or whatever and beyond, right? These are the things that I'm looking for in the market. Not only am I looking for that, I use a tool for my last confluences, and it's the Fibonacci. I want you to understand the Fibonacci a little bit. This is kind of advanced. So this is how the Fibonacci looks. As traders, we use the Fibonacci to see where the retracement is going to go. So since we did a uptrend, let's do a downtrend. So the market breaks, right? It comes down to 23, right? 23 is not a deep pullback, so it'll come up here. And let's say it gets right here and then drops past the 38 to the 50. Most traders that are seasoned, we look at the 50 as the golden zone. So if we're in a market that looks like this, and here's the floor that got broken, which the floor is also the 23, right? But if we're looking at a market that looks like this, let's set it up like this is an actual trade, right? So the market is at this. This is the information that the market has for me at this moment. I see it at a 50 fib. It's a deep pullback. When I say deep, because it just blew right past the 38. So it's a deeper pullback at this point. When the market comes to the 50 on the downtrend, usually you can get a nice deep push back up to here. Right? It's the 50 is the golden zone. This is the continuation. Golden zone continuation. It'll just blow past this one. Of course, that'll be TP1, that'll be TP2. Let's do this. Let me remove the drawing. Put the fib back on. Oh, that ain't no fib. Let's remove that. Let's put the fibs back on. That's just a 50 golden zone downtrend, right? Here we are. The market does this on an uptrend, pushes to the 38, right? Retrace, does a small pullback. 38. It's not deep. It didn't come back down here. It wasn't deep enough. And then let's say it breaks past the 50 and does a deep pullback to 78. That's a deep pullback because it blew past these. And then we have a pullback to the 50 right here. So let me illustrate how it will look in the ideal market. Ideal market, because it's you that have to keen your eye to see stuff like this, and you have plenty of time to do it. What's the rush? No rush. Just wait for this setup. Let the market come to you. Well, here we are. We got 50 golden zone rejection on the uptrend. For the most part, 50 is very strong. It'll probably bust and be probably right here. And we have a TP 1, 2, and 3. And this is how you trade with the fibs. That's just a 50. So let me show you some smaller retracements. These are just examples. I don't want to go too, but we keep doing this. I don't know why. Let's do it this way. Because there's other ways you can look at it. Of course, you can have it this way too. Whatever way you're trying to do it. I never really paid much attention to that, and it works great for me. So let's just say the market was just exploded, just breaking fibs and it cat to the 50 before, and it just It's just going like this. So it already did the 50 rejection, right? Let's say this is the pullback area. The sharp, this is not a sharp pullback. This is a small retracement at this point. The 23, when it gets to this point, 23 is a small retracement. Let's put a little line right there. Line to do more. So 23 is a small replacement. That's a continuation. Usually if it pulls back to 23, we got us a continuation to the upside, right? If we have a pull to the 38, that's a smaller, like that's getting into the deep pullback. So it could possibly come right here to test this and then start coming down at that point. Now we got some type of head and shoulder type deal, and then it can pull back and start making lower lows, possibly. And it can also get to this golden zone. There's so many variations. It can get to this golden zone and just shoot up from there. And now you got this high, low, higher, high, or come down, deep pullback, 23, 50 rejection, fling. Or you can get something like this. Let me make it a different color so you can see. Or it might get a deep pullback and bust below the 50, like this. From this pullback. Now it's going to come to the 50. Now we got a 50 golden zone rejection for a continuation to the downside because it's a really deep pullback. Now you got slanted type and head and shoulder, right? Hopefully I'm illustrating this to you where you can understand. So let's go to the market. This is GBP CAD. If I can get it to, let's reset the chart. So we got GBP CAD right here, right? H4, right? H4, reset the chart. And let's put the candles on. And let's see what's going on. We got a push down, right? So the market was on a downtrend. So if I go from here to here, this is what I mean. I do the body of the candle. Let's make it nice and big so you can see. I do the body of the candle so you can see. So market breaks the 23, retests it, shoots up. Right there could have been a trade. You could have saw this break and this retest, and then you could have put your trade in like this. Okay, so after that retest and failed, of course on lower time frames, you could have took it to the 50. I would take it to the 50 because 50 could be a rejection candle. And I would have put it below that last candle. It looks so small. Let's do it this way. Now look at that. In and out of a trade. Nice lot size, risk 1%. Can you do a one? You could do a 1 or 2 out of this, I think. Let's see, that's 90. But whatever parameters that you want to use, honestly. And then we get right here, we have a 50 golden zone rejection. Where's the rectangle? So you got a 50 golden zone rejection right here off the H4. We put the fractals on. We didn't really have a fractal up there, but you had a golden zone rejection. Then it came back. But see, it closed up here. But if you would have saw this and got in, look how the market dropped. You'd have been in and out of trade. And then it came back up here and closed below. I mean, it closed above the 50. The next candle comes and tries to shoot back down, gets rejected by the golden zone, and the market pushes up. Now it's at the 78. The power of trading with the fib, using the fibs as your stop losses, take profits. This is going to be more on the advanced side of trading, but you'll definitely get better results trading like this, especially on higher time frames. I don't really use it on the 15 and stuff like that unless I'm like really scalping or whatever. But that's as basic as it's gonna get with Fibonacci's. We're trading Fibonacci's. Reason why I'm at GBP CAD, because I want to show you something. Everybody that knows how I trade should know I love to trade fractals off of the retest area and pullback. Let me so this indicator, I'm gonna explain it to you 1 second. Once I get everything marked the way I need it. This is the weekly. I like to go on the weekly and get all my setups. Sharp move, sharp move, sharp move. Price gonna have a hard time passing all these sharp moves. This is the demand. This is the demand area. That's where I'm gonna get out and trade it. So the last lower low on the week, this indicator indicated that this is the last lower low. So with that being said, this is the pullback area. See, sharp move came down a little bit. This is the pullback area, right? Remember how I was illustrating how the market breaks, exhausted the pullback area. So it broke and exhausted and made a pullback area right here. So, and fractals are the same way. We have a weekly fractal. You see what happens when a fractal and a lower low happens? The market push up. So what I'm looking for here is a nice pullback to this demand. After this big drop, here's a pullback to the demand. This is what I'm looking for. Now, from this point, I don't know what's going to happen. It could break the demand and keep going, or it could come down here and start making lower lows. Ain't my problem yet. I ain't worried about it. Let's put the candles on. We got some, these are called I look at these as the 3 bearish soldier candles. I mean, bullish soldiers candles. Momentum is coming to the upside because we do definitely have on lower time frames bullish behavior. So the GBP wants to push the price of Canada back to this retest area. And to be honest, looking at the monthly, if it pulls back to this retest area, here's the next lower low. Let's just say in the ideal world, it pulls back and it doesn't make it. We might have a lower low. I've seen it happen with Euro New Zealand and GBP New Zealand. We might have this move. So when it gets back here, patience, probably next year, and it makes a big monthly or weekly fractal right there, then we're coming and we're dropping it down here. You see why I made that a pullback area? It's quite simple. Sharp moves. Sharp moves are pullback areas. Sharp moves with fractals and lower lows, you can't get no simpler than this. Simplify trading. But anyway, let's go back to the weekly. This is the move I'm looking for. So what we're going to do is this. I'm already in the trade. Let's just say you want to get in now. You have to use a very small lot size because this is how the idea of the trade would be. To here, stops below all these wicks. You do not want to get wicked out by anything. Or you can wait for a retrace on back down there if it happens and then get in, whatever way you want to do. That's what I'm seeing with this trade setup. On the weekly, this will be a swing trade up here. It might take a few weeks. That's where your patience come at. Got to come back to this demand area. Now, if it breaks this demand area, then we'll trade accordingly. It might come to these structural highs, and this because this is a demand area too. Think about it. You gotta think about it. The market. How many sellers? Let me show you something. There's liquidity up there. There's liquidity right there. How many people sold right here and still got sell positions or their stop losses right here? How many people waited for this break and retest to this demand area then sold? There's stop losses all over here for other swing traders. So with the market ain't finna just keep dropping for y'all and have you in this, like if it especially it's not going nowhere. It's kind of ranging. So I can see this pushing back up, stopping all these people out, getting liquidity and coming back down. But eventually, knowing that there's money sitting right here, I can see it pushing all the way up here and wick one more good time before it drops, or just wick all you out and keep going. It's gonna keep, price gonna keep coming back here. It was money sitting right here. You see why? Look at all this. When you start identifying just by looking at these wicks, like it market wicked like that for a reason. You call them stock dumps, whatever. It was liquidity sitting right here from sales. Swing trade swells. Yes, I couldn't even get it out. Swing trade sales. Because look at that. Look how it dropped all the way down there, and then there was liquidity right here. Because see all these wicks, they wicked out a whole bunch of buyers that had buys in this. But this came down, slammed down, and this liquidity right here. I'm putting money on it. People have buys in this. Also been about Fibonacci. This was super class right here. So liquidity was right here. Sellers had sales right here. Swing trading, but they came up to here, stopped them out, came back down. Now we got buyers in the market right here. Came, stopped out the rest of the people that probably had higher stop losses up on this move. So it grabbed all that liquidity and the money moved down. The market always make these liquidity grabs before it come down. So this money all over in this range. And you don't think this gonna come back and grab all this liquidity? I wouldn't be surprised if you come grab these people right here. It's people probably in sales right here and got, you know, they stop loss at break even. It ain't trying, like, I ain't saying that I'm not one of the people that say the market is not trying to feed you or anything. But let's just be honest. If I'm the market maker, or if I'm the whatever, and I could come up here and stop out millions of traders, make billions of dollars, like this wick right here, and then drop the market down, then that's good. And that actually comes up to my final thing that I need to talk about here. When I see these big wicks like this in a close, I already know that was a liquidity grab. I'm getting in the sale immediately. Don't be scared. Think about how many people had sell, what do you call it? Because this is an order block. They call support and resistance order blocks. People have their sale stops, or what is this, sale limit order blocks right here. I'm talking about the big boys, not retail traders. Big banks like Canada banks had sale limits right here. So when it wicked all you retail traders out, because the retail traders get stopped out the most. And then Canada pushed GBP prices down. It had enough liquidity to drop it down. And even look at those wicks down here. Just anybody that had buys, just start wicking, stopping people out. I wouldn't be surprised this come back down one more time and wick down here where there might be liquidity. And then fly back up. Don't be a part of these stop hunts. Be on the other side of stop hunts. Go where the bank going. The bank wick these areas and then close, get in. But that's all I have for this video. Hopefully it was informative. I will see you guys on the next video.